Hey everyone, welcome to Black Culture Talks presents the basics of investing in the stock market 101. I am so happy to finally bring this to YouTube live. It's a course that I've been doing for since 2020. February 2020 is when it launched, and the group is growing, and I really want to bring this to the masses, and we'll talk more about that in a second. So welcome to the first live of many, um, where we're going to learn literally how to invest long term in the stock market. So grab your pen, grab your paper. We're going to try to keep tonight to an hour. And it's a 3-part series, but again, I'll repeat them. So we'll come back on Thursday, and then the third part will be Monday. And then you guys could join our community and stay connected and all that great stuff. So with that being said, I'm just going to, for anyone who, is very new to investing long term or buying stocks or even researching stocks, it can be daunting. It can be something that, especially based on our history, could have seemed like it was preventative, right? It wasn't. And I did just want to make sure I have my phone here. So I want to make sure that you guys can see me. And it was for the wealthy, right? Or some of us may have thought that it was for the wealthy. And I am here to tell you lies. And I always say they don't want us to be great. These are secrets hidden in plain sight. And I'm going to do my best to, bring it to the masses. So let's get started. I posted this on my community page today, and listen, people also think, and we're going to go over some of the misconceptions and the myths out there, but just to bring it, to the basics, to A, B, C, D, E, F, G it. If you would have taken a simple $500 in 2012, December 5th, which is the same day, so 10 years ago, if you would have just taken $500 and invested it in Tesla, do you see what that would have been worth today? $43,211.96 today. I ran the numbers today. So double that if you would have invested $1,000. Your rate of return, or your worth, that $500, that $1,000 would have turned into over $86,000. Let's stop missing out, y'all. That's why I'm doing this. That's why I'm here. And again, we're going to really, break it down. It's the basics of investing in the stock market. This is part 1 of 3. And the name of my community that was launched in February 2020, almost 3 years ago, wow, is Investing for Independence. And I'll share why it was launched and why I'm on this mission. But this could kind of give you a sense, if we as a people were able to invest in 1926 into the stock market, and you would have had $1, 4 quarters, 10 dimes, 100 pennies, guess what? You would have had the opportunity to turn that into anywhere between 7,300 and 37,000 by 2016. That's $1 in the stock market. And I'm hoping you can hear me. I just thought about that. That's $1 in the stock market in 1926. Would have got you anywhere between 7,300 to 37,000 in 2016. And it's all due to compound interest. And, we'll talk more about how that works in the stock market. But many of you are familiar with the great Steve Harvey. Not call him the great. He's like one of the hardest working men in show business, if not the hardest men. And these are the guys from Earn Your Leisure, Market Mondays. And if you don't follow them, I think you should. They have some great beginner information. A lot of it, some of it is for the not the more seasoned investor, but this piece of advice, this gem that dropped from Steve Harvey, is something that I want to share with everyone. I hope you do too. Take this YouTube video, share it with people, even if only for this part of it. So take a listen. And I'm actually going to the masses. I want to make sure I can hear it. So and I'm actually going to
take all the information that you have now with you.
I want to make sure I can hear it.
Investment tips you will want to share with the audience that you wish that you knew back then. Invest now, invest often, and invest freely. Now, often, and freely. The scared man can't win. You in Vegas betting $1. If you're at the roulette table, it's 35 to 1. So you bet $1 and it hits, you get 35. Now, if it missed, you only lose $1. Well, that's how people look at investments. But how it works, man, it works just like it works in Vegas. The more you put out there, the more you get back. So I would invest more freely, more often. I really would, man. And because I did as a young man, I was so concerned with accumulating. But see, once you accumulate, you have it in here and you close your fist. It's all you got. You double, quadruple it when you open it. Now, when you open it, you run the risk of it being taken and it falling out. But that's the risk. That's life. You don't get to be successful without risk. You just don't. I'm sorry. You don't get to be successful without chances. So investing, man, is a smart way to do it. Investing grows your money quicker than anything. You can't work that many jobs. To keep earning money, you got to have some money sitting somewhere that's working for you. Your job is to work to make the money. And then you got to get your money to work for you. And and if I was younger, man, if I had it, I would invest it more. I would have gotten a team together quicker at 25 because I did everything myself. But I had to, I was in a position where I couldn't afford. But then a lot of people let that stop them too. They go from one extreme to the next. Look, man, if you don't have the money, then do it yourself. But don't let not having the money stop you from doing it yourself or anything else. A lot of people wait till they get all the money and then I'm going to do this here. When that's going to happen? When you going to get all the money? Who got all the money? Who what? And you can't wait till it's right. You got to go now. You got to go now, man. It's never going to be right. That's why so many people are not successful. They keep waiting on everything to line up. That's not how this works, man. You got to take chances, man. You got to take risks.
So, listen, you can replay this as many times as you want. You could take as many notes as you need to. But the key takeaways that I want you to get, I want you to hold on to, and I want you to pass along is one, invest now, invest often, and invest freely, right? Stop accumulating so much. That's number two. Like, assets over liabilities is the mantra of Earn Your Leisure. That's what Steve is talking about as well. The accumulation is how people stay broke. Also, number three is let your money work for you. You've worked for your money, now let it work for you. Let that money do what it needs to do in the stock market, not a standard savings account, in the stock market, and watch it grow, basically. So let's go ahead and move on. Now I'm gonna try to speed this up. I hope I can. And I hope you can see it. and hopefully we'll get through it within about 4 minutes. But before we can proceed, there's certain terminology that you have to know. You won't be able to really follow this conversation as a beginner long-term investor if you don't know these terms. So I did a top 11 terms on my YouTube channel. You could go back, rewatch it as much as you want. But let's just get through it really quick. I'm going to speed it up, like I said. Okay, so hold on. I need to get back to, sorry, y'all. Let's go back to present. Okay, here we go. Today we will review 11 terms that you really need to understand before investing in the market. It's so important to take it back to the basics. So, what is a stock? Stocks are a unit of ownership in a business. The number of shares determine how big a piece of ownership you will have in that business. So, if a company has 100,000 outstanding shares of stock and you own 1,000, you have 1% equity in that company. You own 1% of that company. We'll talk more about equity in a second. To sum it up, this is the basic definition of stocks and stock shares. As a reminder, don't forget to subscribe to the channel, turn on the notification, and like this video if it was useful for you. Oh, so before I forget, I'm Kim, aka Kim with the Gems. I'm also a long-term investor as well as an options trader. And I look forward to bringing this information to the beginner and novice investor in an easily digestible format. So just to pause right there, a stock is simply ownership in a company. That's what I want you to take away. You own a piece of the company when you own a share of that stock. How does a stock become a stock? Let's think about it. Let's say you have a business, you want to grow your business, but you need money to do so. So you go to the bank, you ask for a loan, the loan is denied. How will you then raise money to expand and grow your business? You'll have to come up with another way. And that's called taking it to the street. Going with an initial public offering where you gather investors, friends, and family to come out of their pockets to help fund your idea. Once you get enough funding and that money starts rolling in, you now have investors who now own a piece of your business. Remember, we talked about that. And you can go ahead and proceed with the expansion. You no longer are indebted to a bank, but you do have to answer to the investors. The investors get to vote and have a say as they want a return on that investment. These investors are now called shareholders. What is a shareholder? A shareholder, also known as a stockholder, is any person or company or institution that owns at least one share of a company's stock. Let's talk about equity. An equity investment is money that is invested in a company by purchasing shares of that company in the stock market. The shares are typically traded on the stock exchange, and once you own the stock, you own equity in the company. So let's just quickly review. A stock is ownership in a company. It is represented by a share or multiple shares, which is a percentage of ownership in that company. That is then called your equity into that company. So I just want to kind of make it ABC, DEFG, to make it really simple to understand. If you have questions, please put them in the chat section or in the comments, and I will respond as soon as possible. What is a stock symbol? A stock symbol is an arrangement of characters, usually letters, representing publicly traded securities on an exchange. So each and every publicly traded company has a separate set of symbols, as you see here. Amazon is AMZN, Apple will be AAPL, Visa will be V. Currently, there are over 8,000 stock symbols on the U.S. Stock Exchange. Here's another example. Next, we'll discuss the stock market. The stock market is the place or electronic market
also known as exchanges, where shares of these publicly listed companies are bought and sold. Think of the stock market like a traditional market where there are buyers and sellers. Someone is offering a product, someone else is buying a product, and oftentimes there's negotiations happening during the process. Most of these negotiations take place over a computer nowadays, but there was a time where they all took place in person on Wall Street on a trading floor. So, what is an investor? An investor is any person or other entity, such as a firm or mutual fund, who commits capital, aka money, with the expectation of receiving financial returns.
So if you are to purchase a share of stock or a stock share, you are then an investor and own equity within that company.
What exactly is a portfolio? Well, it's a collection of financial investments like stocks, bonds, commodities, cash, and cash equivalents. It is the total sum of all of your investments and assets. These may include your 401k, stocks, bonds, real estate, cryptocurrency. And in case you're wondering what cryptocurrency is, we have a video on our channel just for you. Check out the top cryptocurrency terms for beginners. Next up is a stock ticker. A stock ticker is a report of the price of certain securities updated continuously throughout the trading session by the various stock market exchanges. So not only will you see the stock symbol, you will also see the fluctuation of its price. The price can go up or it can go down. Bullish means it's expected to go up. Bearish means it's expected to go down. Those are two terms that you will hear frequently as an investor. Sometimes the word economy gets interchanged with the stock market. They are separate. The economy is the system under which money, industry, and commerce are organized. Economic health is measured by employment and production growth. The system in the US is considered capitalistic, driven by supply and demand, with a mix of government involvement and socialist type policies such as Social Security and Medicare. In a nutshell, the economy is the wealth and resources of a country or region, especially in terms of consumption of goods and services. The indicators of a strong economy are more jobs, higher wages, low interest rates, and the confidence and spending power rise. Indicators of a weak economy include worsening unemployment rates, rising inflation, declining property sales, and increase in credit card and debt defaults. Well, we did it in under 10 minutes, y'all.
So that literally was necessary in order to move forward. I wanted you to understand one, exactly what a stock is, what an investment is, how the economy is separate and distinct from the stock market. And in order for you to really grasp this whole long-term investing strategy, those were key terms that you needed to know. Now, what I will say is you need to know a lot more than those, but for the sake of this presentation or this course, this class, that will suffice. I will also add a link in the description to the top 40 investing terms that you should really know as you progress. Like you're not going to, Rome wasn't built in a day. You're not going to learn everything in a day. So let's just move on to what you can expect, right, from this basic of investing in the stock market beginner's course. What to expect? You're going to learn the basics of investing in the stock market in an easily digestible format so that you may become a more knowledgeable and involved investor. You're going to learn the benefits that are associated with long term investing. And trust you me, there are many. And even though, if you would have paid attention to the distinction between a strong economy and a weak economy, it appears that we are currently in a weak economy, right? The recession, unemployment, et cetera, et cetera. This is some of the best time to take whatever discretionary income that you have and find solid companies to go long with, to become long term investors with. And we'll talk more about that. You're going to learn how to decide on and set up a brokerage account to begin your journey as an active investor. And active just simply means you're able to say, you know what? I want to invest in this company, or I don't want to invest in that company, versus having someone do all the work for you and you're totally at their beck and call, your portfolio, you have no idea what's going on. So we want anyone listening to this to have the baseline knowledge to know what's going on in your 401k, know what's going on in your 403b, know what's going on in any portfolio that you own and or manage. What this is not. And so if that's what you're here for, feel free to move on, but it's not a how to get rich course. We understand and we live by the understanding that wealth is obtained through knowledge and education, then execution. Um, I just put, a Bible verse. The plans of the diligent lead surely to abundance, but everyone who is hasty comes only to poverty. And that's Proverbs 21:15 for all of my fellow Christians out there. We're not going to learn how to trade options, Forex, futures, day trade, NFTs, or any high risk strategies. I am a options trader. I do day trade, but I have been a long-term investor forever. So, and that's where the money resides. And also there's no promises and or guarantees, right? So just as a disclaimer, and I'll summarize it, I am not a fiduciary and or financial advisor. You have to invest at your own risk. As Steve Harvey mentioned, everything comes with risk. You buy a house, you don't know if that house is going to appreciate or get wiped away by a hurricane, or you just don't know, or a storm or lightning strikes. You just truly don't know what's going to happen to the neighborhood in 20 years. So every investment that you make comes with a certain set of risks, and you need to be aware of that. If you have any tax questions, concerns, or issues, please contact a professional. And with that being said, let's move on. Please, I request that, after this course, you stay informed. So go ahead and register for our email list. I will also send out, we have an Investing for Independence Society, which is the name of our group. And we also have an Investing for Independence Facebook page. All of the videos will be housed on the Black Culture Talks page, which is where you are right now. So please go ahead and turn on the notifications for this channel so you know when we focus on investing conversations. So tonight we have about a half an hour left, and we're going to get through a lot. But we started with the basics. We're going to talk about the power of the market. We got a taste of it through, Steve Harvey's conversation with the Earn Your Leisure guys. We already went over the key terminology that you must know, the 11 phrases that you must know before you begin to invest, and more will be sent to you if you join our email list and become a subscriber. We're going to quickly talk about the state of Black wealth and why I am committed to the mission. And who am I to be talking about this, right? Who am I to be talking about this? But I also, like I mentioned earlier, want you to submit your questions in the chat and or comment section, depending on when you're watching this. And I will respond to each and every one, valid questions, as soon as I can. So a little bit about me. First, let's just, I'm Kim with the Gems from Black Culture Talks channel. I am, a proud Christian. You saw me review the Bible verse that I think applies to anything we do as it relates to investing. Let's not be hasty. Let's take our time and understand. I'm also a diversity consultant as it relates to specifically the African American marketplace. I am a entrepreneur. I have a serial entrepreneur. I have a few businesses, including a travel diversity consulting business as well. Please follow me on Black Travel Culture on Instagram, or go to the website and, learn about what we have going on or coming up. I've been a long-term investor since 1998, so I have some stories. I purchased, I want to say Amazon at 11, 12, $30. I can't, but under $50. And now, it's split one time, going all the way up into the thousands, like 3,500. 4,000, I think last year or earlier this year reached over 4,000. I'm also a swing trader that I mentioned. I'm an options trader. And one of my instructors, who I also talk about on this channel, for those who are interested in options trading and swing trading, Terry Igioma, was just featured on Good Morning America 3 today. So that's the third hour. So she was interviewed today, and she has been a game changer as it relates to upping my trading strategies. And so she's not cheap, but go ahead and look at my reviews. I'm actually going to do another one pretty soon, but go ahead, check out my reviews, see what I think about it. And if interested, go ahead and sign up. Again, it's an investment in you. You learn a lot. I've been a member of since it's going on 3 years now, and I'm still very involved. I do a lot of homework, a lot of research before I do my trades. If I haven't, then I don't trade. I'm also a licensed real estate agent, and I love to travel. So this is the why. Why did I start this movement? Why did I start the Investing for Independence community and brand? Simply put, I got tired of reading about these shocking headlines related to the racial wealth divide. And I'm not going to, there's links to these articles for anyone who wants to receive this presentation. Join our email list, and I will direct everyone where they can find it. But anyway, African American wealth may fall to zero by 2053. Let me read that again. African American wealth may fall to zero by 2053. And we're going to show some visuals as to our standings right now. Stocks are soaring, and most Black people are missing out. That's an ABC News report. Black Americans are less likely to invest than white Americans, the Business Insider. Black families average less than 15% of wealth of white families, according to the feds. And there's a Pew Research study that also talks about how we're laggers as it relates. We overconsume, we're buyers, we will accumulate, but when it comes to investments, we're lagging behind. So I'm not going to read through all of this, but this was the post that I put on my Facebook page to my personal community, because one of these staggering headlines. And then also because I would post about, companies. Somebody had mentioned, they were so upset that Netflix rates were going up. And I think it was going up a couple dollars after a few years. And I, kind of took offense to it, because I'm like, you know what? Invest in Netflix and have Netflix pay for your subscription, right? So if you would have literally this, I'm just going to call that out. If you would have invested $500 in Netflix on January 2nd of 2020, then you would have, and I'm sorry, this was 2021 that I started. Anyway, if you would have invested, I might have updated, but if you would have invested $500 in Netflix on January 2nd, 2020, it would have been worth $771 by the time of this post. So yeah, this is, so it's 2 years, right? So January 2021 is when I started investing for independence. But it's just showing that instead of consuming only, like, yes, have a Netflix subscription, but if you really, really love Netflix, do a deep dive in the company and go ahead and buy some shares so that you're not only consuming you're letting your money work for you, and you're making money by being a subscriber and investing in a company that you love. So people would ask me about, stocks that I would post, like, go ahead and invest. Oh, this is on sale. Nike's on sale. And so I decided to create this community. I'm always all about the culture, for the culture. The name of this channel is Black Culture Talks. The name of my travel company is Black Travel Culture. Everything I do, I'm a proud HBCU Howard alum. And I rep for my people and I want to see us move forward. So, again, that's just a visual to say, let's go ahead and band together and get this messaging out and move the culture forward instead of waiting for the government to give us the reparations or whatever. There's ways to become wealthy in the meantime, right? And so I just also want to add a disclaimer with any videos that I share, like the Earn Your Leisure videos or anything else that I may share. I'm using the copyright disclaimer. It's for fair use and educational purposes, right? It's not for any other reason. And so I just want to go ahead and start with this next video. And I'm not going to play the whole thing. It's going to be a clip of it. So let's go ahead and listen.
So, Frank, I wanted to bring you on because if anybody's not familiar, Frank is a correspondent at CNBC, and you do a great job all the time. But you had no problem. You did a report a couple weeks ago about black net worth in this country, and we posted it, and it just took off, viral all over Instagram, TikTok. A lot of people had different opinions, different views on it. But I think it's important, like I said, to just have a more, involved conversation than just like, a 60-second or 30-second just soundbite on Instagram. So I wanted to just bring you on, and then hopefully we can talk about that and then a few other topics. So I will just briefly just go over the stat if anybody is not familiar with what I'm talking about. So the stat was that Black spending power reached a record in 2021, $1.6 trillion. And that's according to the Slade Center at the University of Georgia. Am I pronouncing that right?
Selig? Yes, the Selig Center. Yeah, I mean, it's University of Georgia.
The University of Georgia. Okay. And that's up since 2000. It's up 171%. But during that time, Latino spending power was also up 288%. Asian is up 383%. And the overall is up 144%. So that would seem like some level of encouraging news. But what's not encouraging is that, according to the St. Louis Fed, they put out a report on the net worth, and Black net worth is actually down. So that's interesting because it would assume that if spending is up, net worth would be up too because there's more money. So what they're saying is that the Black net worth has actually decreased by 14% and it's $24,000 per family, while the Latino net worth has increased 112%, which is $36,000 per family. The white net worth has increased 6% and is $189,000 per family. So
I just want you to catch that. Black net worth goes down 14%, but consumption and spending goes up. I think it was triple digits. White net worth goes up 6%. Like, we have to fix this. We have to fix this. And a lot of it has to do with the fact that they're more about investing and less about consumption.
Okay. This information comes from the Fed. And if you're not familiar, the St. Louis Fed is one of the 12 branches of the Fed. They have 12 branches of Fed banks. And to my understanding, how they actually collect this data is like through surveys. It's like political polling, kind of similar situation like that, right? But how do we come about this number to say, okay, spending is up, but net worth is down? That's a little disturbing. That's very disturbing. I would just assume that it's not enough assets being acquired. Would you say the same thing?
I mean, I think it really comes down to your slogan, man. Assets are the liabilities. You're spending that money on things that don't appreciate in value, that lose their value when you drive it off the lot. important. In some cases, as soon as you put on your wrist, you guys are talking about, high-end fun the dealer watches. But if you're spending on other things that don't gain value over time, then your money's going out, but you're not going up. It's not even any more complicated than that. You see the numbers for other people. Other groups, I should say, they're spending their money on things that appreciate, whether it's houses, investing in businesses, stocks, crypto, a lot of things you talk about on this podcast all the time.
So that's it in a nutshell. Unfortunately, we are in the state that we're in because of our lack of investments. And that's why this community was also created. We have to come together and push each other to be held accountable and more responsible in the area of investing. And, this is a true statement. Wealthy people invest first and then they spend what's left. Broke people spend first and invest what's left. Now let's just take a look at the numbers. The staggering median net worth by age of household head. And it's broken down into white, which is indicated with the light green line, and black with the dark green line. And you can see the disparity, the unfortunate. So, as white Americans age by head of household, their net worth increases substantially, going from, I'm just going to round it off to about 25,000, 18 to 34, to over 300,000 by the time they're 75. Whereas with our people, we start off next to zero between 18 and 34, and then by the time we're 75, we're at a whopping 60 to $75,000. This has to change. If we go back and once again, let's just look at sheer numbers. In 2019, the average wealth of a white family was $184,000 versus the average wealth of a black family at $23,000. I mean, I don't know. I always find it hard to comprehend. I mean, I understand the systematic issues that we face, but we literally have to. I'm making it my mission to, do what I can to bring this information to the masses and hopefully move the needle a little, because the numbers simply don't lie. And this next chart just shows Black families are half as likely to invest in the stock market as their white counterparts. And that's even as higher net worth individuals. So if we look at the first column, if you're making $1 to $10,000, okay, we understand there may be some issues with finding discretionary income to invest, but the blue column represents the white audience and the orange column represents the Black audience. Let's go all the way up to the 200,000 to 500,000 income range. And even at that level, we're only 28% likely versus 54% likely, or excuse me, let's round that up, 29% likely for Black African American versus 54% likely to invest in the stock market. It's sad. It's sad. And it's also because of lack of education and knowledge. So I understand it. I'm here to hopefully change it. Let's move on. I'm not going to play the clip. I mean, I can. Let's go ahead and play the clip. But this is so important because when you think of the late, great Kobe Bryant, right? His whole life was basketball. That's where he made his wealth. He made his wealth through being an elite athlete. But when it comes to investing versus basketball, he wanted his legacy to be more about investing. Like who knew this would be so poignant right now? So let's see if this pops up. I hope it does. I'm checking to see. There we go. Uh-oh. I'm going to have to play that again because the volume was down. Let's go back to the beginning.
Okay. In 20 years,
Are we going to be talking about your legacy in basketball or investing? Which would you prefer?
Investing. Listen, playing basketball, the focus is always on winning championships, winning championships, winning championships. Now, championships come and go, right? There's going to be another team that wins another championship, another player that wins another MVP award. But if you really want to create something that lasts generations, you have to help inspire the next generation.
In 20 years, are we going to be talking about
Plain and simple.
in basketball?
You have to create a legacy. You have to create a financial legacy. And even with Kobe, making sure, there we go. Even with Kobe, I'm sorry. Is this not on presentation? There we go. Even with Kobe being worth as much as he was, his commitment to investing and creating a type of wealth that his children's children's children will be okay was top of mind. And if you look at what happened after his passing, this article shows that Kobe Bryant's 2014 investment demolishes his NBA earnings. So his investments into body armor, and I think there was another sports drink or something like that, totally capsized his wealth that was created in basketball. So, I mean, let's talk about, and I skipped this because what is the stock market? We're going to watch and learn. But this video is going to be more poignant in a second. So let's just think about what it means to have wealth, right? What does it mean to have wealth? It means in this country, which is the United States, which is a capitalistic country, wealth equals power. If you have no wealth, if you have no, if you cannot, if you're dragging the system is where I'm going, that you have no power and you have no voice really. So let's just review quickly. This was a quote that Ice Cube made to Roland Martin. And I also thought this is another aha moment that I really want people to walk away with. He said, "I don't care who the president is. I really only care about Black Americans getting capital and equity." See, that's why we have to learn those words. Capital and equity, because we're not even part of the game. We think we are. We pretend to be, but you're not even part of the game in a capitalistic society without no money. Ice Cube. I mean, I couldn't have said it better myself. I mean, could not have said it better myself. I mean, true. And I keep saying because it hits me so hard every time I read it. If you know the definition of capitalism, it's money. If you don't have any, you're not in the game, period, exclamation point. So let's have more of these conversations. And I'm going to start it again from the beginning, hopefully. Here we go. And this is a woman. She's an author. Her name is Annabelle Gertwich. And the reason why, and she was on Real Time with Bill Maher back in March. But listen to her story, the story of how her family kind of set her up for success in the future. Oops. Sorry, y'all.
As I got to know them, I realized they had saved up money to move here, almost the same amount as I had saved up, right? They had done that working in factories. They had worked menial labor jobs. Me, I moved here, I cashed in stocks I got from my bar mitzvah. I mean, who is more hardworking,
So I wanted to play that because what she was really saying is that she was less hardworking, but was able to accomplish more because of the stock she received as a gift for her bar mitzvah, right? She didn't have to get her hands dirty. She cashed in those stocks and she was able to move to a very expensive city and do okay. Let's leave that type of legacy for our loved ones by long-term investing for them. Let's have conversations with the ones that we surround ourselves with. Even if it's beginner conversation, let's start planting the seed, because you never know when that tree is going to sprout. So let's go ahead and have the conversations. Tis the season. If you're buying someone a pair of Nikes, buy them a share of Nike stock or a fractional share of Nike stock. If we're using Amazon for all these gift deliveries, buy some Amazon shares. And I'm telling you, these companies are on sale right now. But we absolutely can change the direction because we have a choice to do these things. The stock market is open to everyone. And education is the most powerful weapon which you can use to change the world and your circumstance. And that's a quote by Nelson Mandela. But we have to understand and implement what our community, Investing for Independence, calls the woke investor mindset. And that is understanding that wealth is obtained through knowledge and execution. And you may see knowledge, education, and execution, but it just simply trickles down to the more you learn, the more you will earn. And we just have to do a little bit, right, to get a lot when it comes to the stock market. There's a lot of misconceptions out here about the stock market. People want us to believe some of these things to keep us out of the stock market. But I'm just going to go through some of them. There's others, but just know that all of this is truly, truly fake news. You don't have to be rich to invest in the stock market. I showed you how $500 in Tesla could have turned to over $43,000 in 10 short years. $500. How many, what is that, like in New York, maybe that's 6 brunches, if that, or a couple pair of shoes or whatever. But you do not have to be rich to invest in the stock market. You don't have to pay off all your debts before investing. I know there's some gurus that a lot of us follow that advise you to, before you invest in anything, you should be debt free. Let me tell you how the wealthy, the wealthy think about it quite opposite. Some of them will be in debt to make investments, right? Because they believe that the investments are going to pay off. So you do not have to be debt free to invest. The stock market is too risky. I'm going to lose all my money. It's another misconception. The stock market has been around since the 1700s. So yeah, in different forms now, but the stock market has been around, and that's how the wealthy lives. I think the top 89% of wealth, the top 89% of all wealth stocks are owned by less than 10% of all wealthy people. So wealthy people are controlling the stock market, and they would not be doing it if they were not seeing great returns. You need to have good credit to get a brokerage account. No, you don't. It's just no, you don't, right? And a brokerage account is how you purchase individual shares and house them. You won't be able to access your money if needed, which is a fallacy as well. A lot of these brokerage companies or houses give you debit cards. You can, instead of having a account at a standard savings or standard bank, a standard savings account or checking account, you can have it at a brokerage account where you also invest in your stocks. And I'm going to lose all of my money in the stock market. Again, going back to what I said about the wealthy people. And this is the biggest myth that I wanted to debunk here right now. And this is why I'm doing this as well. Warren Buffett, who is known as the Don of investing, he's worth over $100 billion as of last month, and started out poor, made all of his money in the stock market. And basically he says, his famous quote, which is my favorite quote, "You do not need to be a rocket scientist. Investing is not a game where the guy with 160 IQ beats the guy with 130 IQ. No, absolutely not. It has nothing to do with IQ. It has to do with the one that is most consistent. And there's other things that we'll learn about, from diversification to concentration and all that other stuff, and picking good companies. But for the sake of this, just know that the average person can be amazing, absolutely great investor. And it doesn't take much to start. So I'm just going to do like two quick examples of, let's pull this out. Let's do a quick, hold on a second. You can't see the screen. Hold on. Let me do this again. So let's go. Sorry, y'all. I did actually really good for this to be my first time on StreamYard. We're almost done. We're almost done. So Apple, big product, right? A lot of people getting Apple products, from MacBooks to iPads to iPhones to Apple TV, whatever. We do a lot of acquiring, a lot of consumption when it comes to Apple. Not a lot of investing, but I already did this. So just to show you, using that same 10-year span, Apple investing $1,000 on December 5th, which Apple is the company. The purchase date was December 5th, 2012. The investment was $1,000. Let's calculate. Today, December 5th, 2022, it would have been worth $8,222 with nothing else done. You put the $1,000 in on December 5th of 2012, walked away from it, came back to it today. You have over $7,200 of, I'll call it free money, other than the fact you have to pay taxes on it, but money that you have made. So your total profit is over $7,200, which is a total increase of over 722%. I'm going to do, Amazon is another big company, right? AMZN. Let's click on that. The date is December 5th, 2012, $1,000 investment, and did nothing else, put no more investments in, right? That Amazon would have been worth $7,469 from $1,000 investment, $1,000. Let's look at, women like to do beauty shopping, right? So Ulta, because I'm not sure if Sephora trades. I don't invest in Sephora, but Ulta Beauty, if you would have done an investment, and I'm using the 12th of December as a date, but let's just look at what the return would have been. If you would have invested $1,000 on December 5th, 2012 in Ulta, worth $4,700 today. And I'll do, we love some Nike, right? Some of us have $1,000 worth of Nike in our closets, right? Put $1,000 in Nike shares, buying stocks. 10 years later, it's worth over $5,100. And we're talking small numbers. We're talking like $1,000 one time. But if you would have done $1,000 every year in 10 years, which is only $10,000, but broken up to less than $100 a month per year, listen. and in next week's course, we're going to show exactly what that would look like if you would have done $1,000 for 10 years in certain companies. If you have any, recommendations that you want to look at, we can do that, either later or on another call, but you can go to this website on your own. It's called finmasters.com and do your own calculations. Let's try one more. Let's do a pharmaceutical company. What pharmaceutical company? And I'll do J&J because, people are like, oh, J&J, they have to pay this big payout for people who, whatever, trust and believe they have insurance for things like that. So if you would have invested a simple $1,000 December 5th, 2012 in Johnson & Johnson, it would be worth I'm going to round it up, $3,400 today. And the list goes on and on and on. So with that being said, I just wanted to showcase how lucrative the stock market can be as a long-term investor. And all you have to do is make a commitment to investing. And I will take you through exactly the steps. But as we enter this holiday phase, please, please, please think about gifting stocks versus things. And the great thing about it, last year, and I think the year before, no, last year, and no, last year, I created stock certificates for people who bought stocks for either their children, their nieces, their friends, their loved ones, whatever. And that's a great thing to do, so they can frame it and you can wrap it and give it to them as a gift. And we'll talk exactly how you can do that next week. But if you feel like you need more additional coaching or you need help to get started, you can always schedule a one-on-one with me. My Calendly is listed below. Through January, it's $20 off for my sessions. It's $79 versus $99. And I walk you through. So it's an initial session to, do goal setting. And then it's a follow-up accountability to make sure that you are executing on those goals. Or you can use it to really understand the stock market. Like if you want to go deeper, this wasn't enough, you were confused, go ahead and schedule that call. Again, through January, it's $79. Starting February, it goes back to $99. And just quickly, we're going to run through this because it's 8:00. Tried to keep it to an hour. Maybe I will, because I think we start a couple minutes afterwards, after 7. But how does a company get listed and shares created? So this example, I've also added a link in the description. There's a great documentary on YouTube, but it was, and it's also on Netflix as well, but it talks about the stock market and it breaks it down to the very last compound. It breaks it down so you can really understand the origins of the stock market and what exactly the stock market does. And this is a part of that documentary. And really, this woman, this little girl, Jill, I'm going to take it here. Jill had an idea for a lemonade stand. Jill was very successful at that lemonade stand. She made a lot of money. She wanted to expand. She wanted to do like lemonade popsicles and other things, but she needed money. She needed additional money to be able to get the freezers and get the extra ingredients and hire more staff. So she went to the bank. The bank said, yeah, nah, you really don't have no collateral. We really don't think you're going to pay us back. Plus, you're not the same color. Because you know how that goes down, right? So we have to deny you. But, Jill was not going to let that stop her. Jill was like, something? I know some peoples, and they know some peoples, and they know some peoples, and they all love my product. So I'm going to have what's called an initial public offering, which is an IPO. I'm going to take my lemonade company public, and I'm going to have people invest. So she raised more capital, raised more money by having outsiders invest. These are people who are now ownership in her company along with her. They also have a say in how the company is run, from the management to the board of directors, et cetera, et cetera. That money is then used for her innovative and expansive ideas. She was tired of just selling the lemonade in the cup. She knew that she had some great creative ideas that could really make her company blow up, but she needed capital to do that. She presents these ideas to her board of directors. Either they approve it, either they don't. But the point is, she now has the capital to go ahead and expand. And the greatest example of a company that learned how to expand was Amazon. Now, Amazon started off their IPO as they were dedicated to books, right? So they could get books to you quicker. It was all about reading and books. But they had, a vision under the founder and CEO, the CEO, Jeff Bezos. So Amazon held its initial public offering on May 15th, 1997. I literally bought my first stock in 1998 at the price of $18 per share. Notably, a $10,000 investment on that day would have been worth more than 12 million 12 million dollars as of May of 2020. And that's more than 120,000% growth. So let me just say, when Steve Harvey, going back to his quote or his comments, invest more, invest freely, invest often, because although I invested in Amazon, of course, I was the scared money, but still making some money. Instead of taking the money that I was wasting on designer shoes or bags or whatever, things that were not appreciating, I, could have taken that and invested it in Amazon and sitting pretty right now. And then since, the public offering, they have bought up just about everything, which makes them, it's one of the biggest success stories and best stories of an IPO. So today, not only do they own Amazon, they own Whole Foods, they own Ring. Everybody has a Ring, right? And the security cameras. They also own is it Alexa or Echo? I forget. Wait, here is it up here? But anyway, Zappos, so much Twitch, and all of these are businesses that will carry in the future because of the artificial intelligence, the data collection, the robotics, and we'll talk more about that later. But I just wanted to really kind of bring this all home by saying that the company gets to, by offering shares in the company and offering an IPO, they get to raise money to expand their business. A lot of times these companies are, do not qualify for bank loans because they're either too new or they haven't proven themselves or whatever the reasons. But at the end of the day, they have these visions and they need them funded. So that's the reason why a company will go public or wants to go public. You can read this at your own time, but every share that's sold, it generates money for the company. So whenever we buy a share of a particular stock, the company makes money, and they have a certain amount of shares, which we'll talk about. Companies that are mega cap versus small cap and mid cap coming up, but I really just wanted to go over that. So between now and Thursday, I really want you to just, if you're seeing this live or if you're seeing this before Thursday, think about companies that you would love to invest in. Think about companies that you use on a daily basis that you would really like to say, I'm an owner in that company. And I'm going to talk about how ownership has its privileges. So sometimes, people who are owners in companies get more perks than the average consumer. And it could be worth it just for that reason alone. And I don't even mean like millions of dollars of shares. I mean, just being able to say, I am an investor, I am an owner in this company, and I want to see this, and that happen. And so we'll learn more on Thursday about how to actually purchase those shares along with other things. So I really just want to thank you for sharing time with Kim, aka Kim with the Gems, tonight. And up next, we're going to talk about the exchanges, which is how and where the buying and selling of stocks takes place. We're going to talk about the beauty and the magic of compound interest. That's having your money work for you without you having to lift a finger. You work for the money, you put it in whatever investment account or brokerage account, and that compound interest is doing all the work. The brokerage accounts are primarily where if you want to be a continuous investor, so buying fractional shares or even setting aside a certain amount every month or every quarter to invest in, a brokerage account is your best bet. We'll talk about the best in class brokerage accounts. We'll also talk about picking solid companies. How do you research those? And again, it's not rocket science, just like Warren Buffett said, it really is not. The companies give you all the information, really. It's like a report card that they send out quarterly, and through that information, you can really decide if the company is solid or not. So again, thank you for your time. Join me on Thursday, December 8th at 7 p.m. same time. We're going to try to keep that to an hour as well. We're also going to meet again on Monday the 12th for the final third-parter installment. And then we'll have a separate Q&A for people who want to join the society and stay connected and have accountability and really be part of the movement to close this wealth gap. So with that being said, thanks again. I'm Kim, aka Kim with the Gems, if you forgot, and I will see you on Thursday. But don't forget to subscribe to the channel and like this video when you get a chance. Until then, thank you.